Good morning, good morning. How's it going, everybody? Nice to see you on this nice Thursday morning, March 28, 2024. Hope you guys are having a good day so far and a good week. Certainly, it's been a good week for us at White Oak FX University. We've been opening up some positions here and there, and they're mostly all doing extremely well. It's unbelievable. It's almost like magic how these trades happen to work out so wonderfully well. But it just goes back to, when you track the markets and you follow what the institutions are doing with price, if your analysis is good and it's accurate, then it's likely going to perform the way that you expect. And so that's basically what's been taking place lately. So yeah, good morning to you guys. Thanks for joining today. I'm going to take a look at the currencies. They've been making some moves lately, and I think it's important to track every time a big move is made in the markets. I think it's important to track what is going on, to decipher why it's taking place, and then we can determine what is likely going to happen from there. So that's what our focus will be on today. And so I'm glad that you guys joined me, because if you guys trade currencies, you do not want to miss this episode. So again, welcome. Nice to have you guys. Thanks for joining in. As you can see on my chart, we have the Euro US dollar that is currently up right now. And I don't mean price is up. I mean, you're looking at it here, okay? Obviously, you can see that price has been making its way down. And, as I mentioned back in December last year, we have a bearish bias on euro. And we think that the euro is going to drop quite significantly. And it's all about just timing the markets and getting into position at the right time. And we've gone through this one before about the timing that we used by looking at retail sentiment. And back here, you could see this was the initial entry into our short position was back in December 2023. And we were looking at retail sentiment. We can see that it reached as high as 90% short at one point. And I had pointed out previously that we had an ascending structure here that was created by the institutions. Okay, here's your ascending structure that was created. And what took place was price came down to the top side of the ascending trend line, because that was right here. Came down to the top side of the ascending trend line, and then what took place? What took place was a big shift of positions right there. And retail traders, they dumped their short positions and went long. Okay, and they went long as price declined, and came to the top side of the ascending trend line there. And this was where the banks were going to use it as an opportunity to fill in short positions that they wanted to fill in. Okay, so those short positions that the retail traders were offloading to the banks, they were happy to take them on. And so we saw an initial huge drop in price, okay? Huge. And the reason why this was huge was because this was institutional money coming in massively. So we rode that wave, and we stayed in our shorts, and we added to our shorts, and we held it onto our shorts and added until down here. This is where we exited our shorts. So we rode that wave all the way down, and it was a beautiful one. Beautiful. And then if you take a look at price action, you'll see that they did something very similar once again. You see the structure of price? There you go. Ascending structure to the upside, okay? Just like they did it here, created an ascending structure, they did it here, ascending structure. Now, why did they create these ascending structures? Well, again, it goes back to what I've been saying. You go and take a look at your conventional technical analysis books. They teach you about trend lines and ascending structures, and to them, something like this is an uptrend. It's rallying up. It's, you know, making a higher low and higher highs, right? These simplistic terms, these simplistic definitions are what get people in trouble. So they create this ascending structure, and look what happens at the highs of this structure. And this is why we like to track retail sentiment, because look what happens at these highs. You see what happens at the highs here? You see what happens at the highs here? Okay. So they get super aggressive with short positions. And then what ends up happening as price declines, they exit out of those shorts. Who do you think is picking up those shorts? Once again, okay, the institutions are picking up on those shorts. And so price rallies up. We had a short signal here. We had a short signal here. And so look at price declining now. Same thing as what happened here, just looks a little bit different the way it plays out. But the concepts are the exact same. The reasonings are the exact same. They're making a move, a significant move, after luring retail traders into accumulating the shorts that they want, and then they offload those shorts to the banks before pushing price to the downside. So this is what's taking place with the euro. And so so where are we at now with respect to price action? Well, let me just take a screenshot of this, because this is just so lovely. This image here, it's like a beautiful map of what is taking place. Just beautiful. Lovely. All right. So what do we have now? Well, let's open this up here. Let's just get the screen out of the way. And let's clear the charts. And now let's zoom in to this latest situation that we've got playing out here. Here we go. And let's just bring all the retail sentiment into play here. Okay, so this is what we got going on now. So we had the significant selling by retail traders here. That's a massive accumulation of short positions. Price comes to the ascending structure here. Right through here. And then look what happens. They offload their short positions for longs. Why do they go for longs? Well, because the top portion of the ascending trend line is being contacted, and so the technical analysis books tells you that this is likely going to take place. So they fall into the trap, and then banks are happily accepting those short positions. Price declines and starts making the move lower. So this is where we're at right now. 73%. They were somewhat aggressive down here at these lows. And so we got the rally up. And this rally up was retail traders offloading long positions to get into shorts. So the banks push price up. And then they offload their shorts to the banks and to us in order to ride the momentum to the downside. So now we're reaching 73%. So what we can tell is that whenever retail sentiment gets into the 80s, high 70s, then we will typically see a rally to the upside form. And what's interesting is that right now, when you look at my chart, what you can see is that we have this area down here. And this is an area that we located of significant importance. And we suspect that a move to the upside is going to be built from this area. So I think there's a good chance that we can see a little bit more of a push to the downside until this area of demand comes into play. And then when it does, we are expecting a move to the upside. All right. So these moves to the upside, you might be asking, well, how big are these moves to the upside expected to be? Is it going to be something significant, not significant? What are we looking at here? Well, this was a significant move to the upside, if you would agree. But you have to understand context. You have to understand the reasons why large moves like that would be taking place. All right. So do I expect a large move like that to the upside to take place? I don't think this is going to be replicated. What happened here? I don't think this is going to happen here, that sort of a move. I think the move to the upside is going to be short-lived. It's definitely going to be short-term move to the upside, but a move to the upside is definitely in the works. You can't have moves to the downside without there being retracements, okay? And we all know this, right? We've studied the markets. We've been in trades before so many times where, you get in short. Don't you just wish it could just drop forever? Well, yeah, we wish that it could just drop forever, but the markets don't move that way. And the reason why the markets don't move that way is because there always has to be a transfer of positions. Retail traders are always going to get aggressive with positions, and then they're going to realize that they're wrong, and then they're going to switch to the other side. This is how it goes. This is why most retail traders lose, is because they're not trading the reality of the market. They're trading patterns, okay? And you can't trade patterns because patterns are not reliable. Patterns are going to be used against you, all right? This is the basic principle of trading. If you don't understand that, you will lose money. Guaranteed. I'd bet on it any day of the week. Yes, sometimes you will make money, but really that's just a fluke. Or, you can sometimes find one little niche where you see something happen repeatedly, but, the end of the day, you're not trading the reality of the market, like I like to say. Okay, so that's what I am seeing with respect to the euro. So when we look at the euro and we determine a certain move is going to take place, what we like to do is look at other currency pairs to see if there's any type of correlation taking place between those. And so I'm looking at the pound, and I see currently we are at 73%. Look at what happened when they were at 88%. Okay, move to the upside. Very aggressive? No, not really. Not very long term. This is a 4-hour chart, so each one of these candles represents 4 hours of trading. It wasn't a huge move to the upside. Now we're reaching 73%. Are we about to see a move to the upside? I believe so. I don't see any significant demand until lower down. Do I think price is going to get down there? It's hard to tell. It's possible, but that is quite a distance for price to drop before a rally. So don't know. I can't tell you if it's going to drop or not. An interesting one is US dollar, Japanese yen. Okay. And this is what we've got going on right now. 78, 77. They're just sitting up at these highs here. They haven't made a move yet. And, it's no wonder that they haven't, because there's really nothing taking place in terms of the movement. So if there's no significant movement taking place, then retail traders are not going to make any significant changes in their positions. But do I think there's a bias here? Obviously, I think there's a bias here. I think when you look at price and you see that they're in the highs of shorts, I think there's a bias of price declining. Okay. But but they have to be, something has to be instigated. There has to be some type of a situation taking place in the markets to instigate and cause a reaction. So, just like as we were saying with the euro, we suspect that there's going to be some type of move to the upside, and everything is pointing in that direction. I believe that there's going to be some kind of a move to the downside here, and definitely the retail sentiment is in line with those expectations. All right. So let's look at the other ones. Let's look at USCAD. What do we have with USCAD? Similar situation, okay? And if you notice, if you take a look at my charts, what you'll see is that we have a supply area here that's been contacted. And look at positions. 86, price dropped. And then they reduced it, price came up. 85, price is already starting its small decline. So I think definitely the bias here on the USCAD is to the downside, which is again in line with what we're seeing with the US dollar Japanese yen, which is in line with what we're seeing with the euro US dollar move to the upside. And yeah, there's definitely a good correlation here between all of them. Let's go to US Swiss and take a look at what's going on here. Interesting, we have supply once again in play. Okay, institutional selling area. And look at retail sentiment, 87% short right now. Okay, this is just screaming that it wants to go down. So is it going to happen this week? I don't know. I can't tell you if it's going to happen this week or not. But what I can tell you is that it's likely to happen. Okay, it could happen the rest of today. It could happen on Friday. It could start next week on Monday and lead into the rest of the week. But definitely some type of move is going to begin at some point. So that's it for now. I hope you enjoyed our session together. So keep in mind what we were talking about with respect to the euro US dollar. And we'll continue to give you some updates next week as things play out. We'll take a look at the retail sentiment, and we'll put things into perspective for you so that you understand what is truly taking place with price action, right? And if our analysis is correct, then price will play out exactly as our expectations. All right, folks, that's it. Thank you again for another wonderful session. I appreciate it. If you want to find out more about what it is that we do here, you can find us at www.whiteoakfx.com. Thank you very much. Enjoy yourselves, and we will see you tomorrow morning. All right. Take care, everybody.